You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 28th day of March, 2022. Hope you had a great weekend. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We broadcast live every trading day at 12 noon Eastern. Our live training room is from 9:30 a.m. to 11:30 a.m. Eastern. Then we take a 30-minute break, and then we go live at 12 noon Eastern for the entire world. There's two ways to join the show. YouTube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, but we archive each and every daily show. Currently, there are over 1,900 daily live broadcasts archived for your educational and viewing pleasure. Now, using the YouTube channel means you can join the show any day from anywhere on the planet with any internet-connected computer. You just simply don't have access to the chat box. Now, there's another way. You only have to do this once. Go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. And it also gives you access to the question box so that you can ask questions and participate in the discussion. I'm unable to monitor the chat box or question box on the YouTube channel because I'm focused on our members here on the GoTo platform. So, the way it works is once you go through that 30-second sign-up process, going forward, every day you'll get an email right before the show starts. And when you're ready to join the show with full access to the question box, just click the link in the email and you're in like Flynn. You don't have to fill anything out. Just click the link and you're ready to go. So with that out of the way, let's open with a word of prayer. Our scripture today is 1 Corinthians 15:58. Therefore, my dear brothers and sisters, stand firm. Let nothing move you. Always give yourselves fully to the work of the Lord, because you know that your labor in the Lord is not in vain. So how do you do that? Perhaps no one knew what it meant to be strong and immovable in faith more than Paul. He endured a tumultuous amount of torture on account of the gospel, but he also dished out his share of it before he encountered Christ and his life whiplashed around on the road to Damascus. To be strong and immovable means having the strength to forgive ourselves and walk away from the sins and waywardness of our past lives. In Christ we are a new creation. There is no reason we need to remain in the guilt and shame of the past before we surrender to Him. When we are strong and immovable, we can walk into new life with and in Christ, never turning back. Join me in prayer. Heavenly Father, we continue to pray for the people of the Ukraine, the citizens of Russia, the surrounding countries, the world at large. Teach us what it means to be strong and immovable in our faith. Let us live our lives to the full capacity you have purposed for them to be. Yahweh, Abba, Jireh, Jesus, Messiah and Savior, Holy Spirit, Strengthener, Comforter and Helper, the one true, triune God, glory to you in the highest. Thank you for the life you have given us to live this and every day. Thank you for the breath we are breathing and the fulfilling joy we experience in Jesus Christ. When life is difficult, Father, it gets hard to remember all of these truths. Realign our hearts today, God. Remind us who you are and whose we are. Foster in us a focused, forgiving, and obedient spirit, ready to get up and go share the love of Jesus with the people you have placed around us. Lord, make us strong and immovable. Help us to grow today into a more godly person. Let the lies and distractions of the enemy fall dead at our feet and fly over our heads, never taking root in our thoughts or hearts. Father, amplify your voice and your truth above all other voices in our lives. Help us to be laser focused on you so that we are able to withstand the arrow of distraction inevitably pointed in our directions. Father, we pray the words of Paul's letter to the Corinthians over our lives. Let nothing move us. Let us always give ourselves fully to your work, because we know that our labor in you is not in vain. We pray that you would fill our lives with blessing, favor, strength, and confident hope in you. In Jesus' name we pray. Amen. And amen. Okay, I got the new mouse. Well, actually, I borrowed a gaming mouse I had given my son that I saw he wasn't using. This thing has 1, 2, 3, 4, 5 buttons, plus a left click, plus a right click, and a wheel. And I haven't figured how not to do things I don't want to do. But the good news is the mouse itself works great, except when I hit one of those buttons that I don't know what it's all about. So anyway, I promised you the numbers from around the world. Let me give you those. Starting here in the U.S. with the indices, as they're called. It's the cash markets, not the futures market. These are the numbers that you see quoted on CNBC or you hear on the radio. They're talking about the index itself, which you can't actually trade. Man had to create derivatives to trade the indexes. The Dow is currently down 281 points. That's almost 1%. NASDAQ is down 34.5 points. S&P 500 is down 20.5 points. And the Russell 2000 is down 24 points, which for the Russell, and the Russell let us down right off the open last night. For the Russell, we're down almost 1.25%. In the commodity basket, crude oil hit hard, down $6.16, trading 107.71 last. That's a drop of almost 5.5%. Gold down $17.50, which is almost 1%. And silver down 41 cents, which is over 1.5%. Now, when the price of silver moves $1, if you're trading one futures contract, that has a value of $5,000, profit or loss, depending upon which side of the trade you're on. So a $1 move equals $5,000, and silver today is down 40 cents on the session. In the Asian markets at the close, the Nikkei posted a loss of 205 points. The Shanghai rose 2.5 points. The Hang Seng rose 280 points, which is a gain of a little over 1.25%. And in the European markets at the close, FTSE posted a loss of just 10 points. The DAX rose 111. The CAC rose 35. Some pretty quiet consolidated trading around the globe. So that gives us a mixed day in Asia, a mixed day in the UK, but it's a solid red Radio Monday here in the US of A. So with that, we'll go to Michael and get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll look at the Logic 247 alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question, just type it into the question box and we'll be happy to answer it for you. So Michael, if you're ready, you can take it away. Okay, he's not quite ready. So let me see if my fancy mouse will put up a daily chart of the S&P. Here we go. Here's the holdup. Okay. Now we drew this in ages ago. You can go back. All of our shows are archived on our YouTube channel, youtube.com/CFRN. If you go there, whenever you go there, just make sure you click that subscribe button and the little bell. That way you're always notified when we go live. So we expected this area to be resistance, and it was. And we expected this area to be resistance, and it was. And that created a window of opportunity between the two resistance levels. So we filled it twice on this day, then we filled it going the other way, and then we filled it again here. And this was Friday, which was pretty quiet. It's a pretty small candle compared to the previous days. And now we're on the Monday candle, which actually started last night at 6 p.m. Eastern. That's when the global markets open. And what you're looking at is the 62% reverse fib. That's what that little red line is. Now I say reverse fibs because typically people draw fibs from the low to the high to see where the market will find support. Because we've been in a downtrend since the beginning of the year, basically. The all-time historic intraday high was put in on January 4th of this year. So we drew our fibs from that high to the most significant low. Originally, we had drawn them down to here, and now we had to bring them down to here. And you can see that each time price pull back to the BVC, that's the green line. It just stands for bull bear cross. When price crosses above it, we're bullish. We anticipate higher prices. When price crosses below it, we're bearish. We anticipate lower prices. That's true on every market and every time frame. The other indicator you see is the CFMA1. I refer to it as red and falling, blue and climbing. One is bullish and often acts as support, as you see here. Red and falling is bearish, and that often represents resistance. Blue and climbing support, red and falling resistance. Again, that's true across all markets and all time frames. Now, we did take out the high of Friday. Friday, we put in a high at 45.39. This new session, we put in a high at 45.48.5. Right below us is blue and climbing and the daily step line, both of which could be good support. If price is able to trade through those, that's bearish, because that means we're probably headed back to the 50% reverse fib, which served as support for 1, 2, 3, 4 trading sessions. And then down here is the daily BBC, which we expect to give us a very nice bounce. Okay, I hear Michael, so
Yes.
we'll turn things over to him. He'll give you a recap of what happened in the live training room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts. And at any time during the broadcast, if you have a question, just type it into the chat box. So did you watch the Oscars last night?
I did not. I
hear,
did see one little clip about Will getting up there and throwing a punch at Chris Rock.
Slap. Well, they call it a slap. I haven't actually seen the video.
I saw the video of it, but I don't know. I think it was all staged.
Yeah, that's what my wife said. She goes, I think it was staged. So, because I guess Will just made some movie where he was very violent. I don't know if it was domestic violence or whatever it was, but anyway.
I'm sure it was all staged.
Yeah.
That's how they do things.
That's how they do things in Hollywood. Here, we just tell the truth.
Yep. There, they just make it up.
They make it up. We tell you the truth. Okay, buddy.
That's it.
It's all yours. You can take it away.
Right. Here we go. Good afternoon, everyone. Happy Monday. Today is the 28th day of March, 2022. If you've not taken a free trial with us and you want to, go to eminitrainingschool.com. On this page, scroll down right here. All we ask for is your first name, your email, and your phone number. You can tell us biggest training challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial, so make sure you click on that link. All right. All right. Here now. The spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Okay, today we had a pretty good day. We had a really good day, actually. Today is, as I said, the 28th day of March, 2022. We had 165 ticks in crude, 35 in gold, and 25 on the ES. Put us up $2,312 a contract. Today it took 4 minutes and one trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 31 trades this morning. So on the month now, we're up $31,680 a contract. That's over 20 trading days, averaging $1,584 per unit per 2-hour trading day. We've now gone 121 days since our last down day, and we've gotten our goal on 59 out of 59 days so far this year. That puts us at $67,443 on the year, averaging $1,143 per unit per 2-hour trading day. If you were to quit when you got your goal for the day and added one contract a month, you'd be trading 3 contracts right now. So, and instead of 35.84, that would be 3 times that, whatever that happens to be. And you would have worked a total of 8.85 hours, right? Averaging $1,761 an hour on the year. No, on the year, $1,761 an hour on the year. All right, so let's go to how we did it all. I'm just going to start out at the left and work my way across. All right, gold. We had some pretty nice trades here on gold. There was something. What is going on right there? It's like there's a drawing object in there. Right here. There is. Okay, I see what the problem is. I had changed these on Friday. I don't know if these are. Nope, they should be the blue ones. Or green is what I was always using. That's what's there. Okay. All right, there now you can see support and resistance lines. All right, so we started off here. The first trade of the morning was right in here. It was the highest probability trade, but I didn't get into it Would have been a perfect trade to get the goal on. The next one, I got a break even right there. Then the next one over here, I only got 3 ticks out of that. And then the next one over here, I got 8 ticks to put me at plus 11. Then I followed that up with, it looks like 9 ticks to get me to plus 20. Then I had a break even right in here. Was there another trade in here? We had nice separation down here, but I don't think we would have taken that trade right there. We had a break even on that one. Right here, it looks like we had a break even there. Missed a trade there. There was a trade off the BBC right here. You could have taken if you wanted to. It was kind of choppy, that's why I didn't. In here, we got 6 more ticks to put us at 26. Okay, then looks like there was a long trade here, long trade there. Then all the way over here, there was a mistrade. I don't know what happened in this period right here. Oh, something happened that made it move really fast. Gold in like just a few seconds. Went crazy right in there. And I remember because we were saying it was going to get up to this level right here. And it got up exactly to that level and then went shooting down and did all these bars in like just a few seconds. Had a long trade in here, another long trade in here. Why do I have that highlighted? I didn't have that highlighted as a long trade. That was an area that I thought it was going to get up to. Okay, then in here we went 4 more ticks to get us to 30. Went from 26 to 30 right there. And in here, I think I missed. No, I picked up 5 ticks is what it says. I got 5 ticks on that to get me to 35. And we had a break even there, though I think I actually got more than 5 ticks on that. I think I got 10. And I got a break even in there. Now during the break, there was 1 trade right here, 1 trade right here. It turned around and gave a long trade right here, and that was it. Okay, and that was gold. Crude oil. The crude is where we got the gold for the day. Crude was kind of wild today, so it was jumping all over the place. Our first trade of the day was right here. We picked up 10 ticks on that one. That was the highest probability trade right here. Bounce off the BBC right there. Okay, everything was blue. We hit the BBC. We got 10 ticks. It kept going. There was another trade right there to get into it, but I didn't. The one right after that, we got 12 more ticks right here. This was a down close off the BBC. We got 12 ticks there to put us at 22. Missed a trade there. Then we picked up 30 ticks on this one to get us to 52. We had 2 30-tick trades today. There were more trades in here, all through here. This was a bounce off the BBC trade. This was the highest probability bounce off the BBC. This was not a highest probability, but it was still a bounce off the BBC. And this was a bounce off the BBC, though the cycle was kind of flat in the middle. That's probably why I didn't notice it. This was a bounce off the BBC, highest probability. This is one where we finally took a trade again. We got up to 62. I say finally, it was just a couple of minutes, but we got up to 62 on that one. Then we went from 62. We got a break even there after all that. We ended up with a break even right there. Missed a trade. Then it looks like it's a lot of time in here, but it's really not. It's just about 5 minutes. Okay, all the way over to here. We picked up from 62, we went to 74. So we had 12 ticks on that, I guess. And then we went from 74 to 78 right here. We picked up 4 ticks there. Then we had another 30-tick trade right there. We went from 78 to 108. And then it looks like we had a break even there. 10 ticks there to get to 118. There was another trade right in here that you could have gotten long on. And over here that you could have gotten short. And in here there was another short. And here there was another short. The slingshot wasn't right for the bounce here or there. It finally got right for the bounce right here. Okay, the trend line trade right there. But here we went from 108 to 130, so we picked up 12 ticks right there. Went from 130 to 145, so we picked up 15 ticks there. Then I took a walk and I missed all of this right here. But you see there weren't a ton of trades. There were some, like there's 1, 2, 3, 4. I'm looking down here at the bottom. 5, 6, 7. 7 trades. Just looking at the pullbacks here on the green line. I knew there were going to be pullbacks on price. So there were 7 trades there, and then the cycle had to reset itself. Took a little while to do that. You got all this garbage all through here. At that point, we're at 145. We took a trade here. We got 9 ticks to put us at 154. And then we had one more trade somewhere. Somewhere I didn't write down, where we picked up 11 ticks. That got us to 165. This might have been the 11 tick trade. There was a 9 tick trade somewhere that I don't seem to have written down. But anyway, we ended with 165 ticks. Right, and then during the break, let's see, just the highest probability trades. One right here, profitable. 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 Those are all just highest probability trades, guys. You only need one of those, and every one of them was profitable. All right, that was crude oil. Now, the ES was pretty volatile today, too. It did have some periods where it was just kind of choppy and sideways, though. It was just, But we started off, hang on. Let's get in here. We started off right here with the ES. Our very first trade on the ES was 9 ticks. Okay, our next trade was 8 ticks. Put us at 17. And then we had a break even. Then, choppy. All messy. You see how the slingshot is all messed up down here. You couldn't do anything with any of this. Break even. We got 1 tick on this whole thing over here. And up and down and up and down. I ended up with 1 tick. I forgot I had the trade on. But that put us at 18. And then we had a 5 tick trade right here, put us at 23. There was a trade up here that I missed. It looks like there was probably, nope, there was just one right up here that I missed. I got that one. And it was just so nasty and choppy through here. It was really good right at the end of the day. But at this point, we're at 23. We got a 2 tick trade somewhere. Maybe right at the end. Yeah, we got a 2 tick trade right here that got us to 25. Then we had a break even right here. Now, this is what it was doing right at the end of the day. You could see it coming really well. Like this line down here. You could see that coming when it was up here. And it went down there, and then I could see the next one down, which was the zone down here. Well, I was saying 24, I think. When it was down here, I was saying 24. And it did pull all the way back up. This ended up happening during the break. I wasn't watching here. But there was a long trade off the BBC right here that would have come really close to stopping you out if it didn't. And it would have been a break-even trade if you stayed in it and followed the rules. All this movement, and there really wasn't any other trade through all that, even in here. Right here was a long trade. Right here was a long trade. Right here, nope, not quite. That was it. The ES it was really congested today. You can see my zones are on here. There's one right here and another one right down here. Okay, we just hadn't gotten to them in the room. We did get to last week's zones today, but we didn't get to this week's zones. So open up the question box. There are no questions, so here we go. That is the rules. This is what I was looking for. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 28th day of March, 2022. We made 165 ticks on crude, 35 ticks in gold, and 25 ticks on the ES, put us plus 23.12 on the morning session. Today, it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. We took a total of 31 trades. So on the month now, we're at $31,680 a contract. That is over 20 trading days, averaging $1,584 per contract per 2-hour trading day. We've now gone 121 days since our last down day, and we've gotten our goal for the day every day so far this year, 59 possible trading days. That puts us at $67,443 per unit per 2-hour trading day, averaging $1,143 per unit per 2-hour trading day. That is on the year. This number is on the month. This is on the year. If you were to add 1 contract a month and quit trading when you got your goal for the day, so far this year, you would have only traded 8.85 hours and you would have averaged $1,761 per hour. Okay. 1761 per hour. And that is it with that, guys. Now, if you've not taken a free trial with us and you want to, go here to eminitrainingschool.com. Right here, all we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know whether you took the free trial, so you got to click on that confirmation link. All right. All right, that's it, guys. With that, we'll wrap it up. Send it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am ready. Let me do that and do that. Okay, recap of the recap. Did I lose you?
Yeah, my mic was off. Sorry.
Oh.
Today, it took 4 minutes and 1 trade to get to $100 contract. Ding.
Congratulations, good job, and wow, what a big day for you on crude.
Yes, it was a nice day on crude. It was, I mean, and you know, some days it's just crazy. I mean, we did have 230 tick trades today, but still, we were up. I mean, even without the 230 tick trades, we're still up 105 ticks.
Now, a 30 tick trade, guys, is worth $300, $10 a tick per contract traded.
That's right. That is per contract traded. And you know, for anybody who's in here who doesn't know what a contract is, don't be intimidated by the word contract.
Yeah, you're not in the army now or anything like that.
Yeah, I refer to it as gum. You know, you're buying one piece of gum, and in a few minutes later, you're going to sell that one piece of gum for more money, or you're selling one piece of gum, and a few minutes later, you're going to buy it back for less money.
There you go.
That's what. And you know, if you work your way up to it, you can buy more than one piece of gum at a time. And
if you understand what a stock is, and I'm sure everybody understands what that is, it's fractional ownership in a company. A futures contract is a derivative. As I explained earlier in the show, you can't actually trade the S&P index. You can't actually trade the Dow index. Man created derivatives so that we could trade the benchmark indexes. So there's futures, there's options, there's ETFs, there's other derivative type instruments, and the one that we focus on in the live training room in the morning at this point, and since our beginning, has been futures. Going to see more and more about stocks because of a lot of stuff I won't go into right now to take up all your time. But
now that we're on TradingView, then all the other things come into play.
Everything we teach, everything we teach, our methodology, our strategy, and our indicators work just as well on stocks and Forex and crypto and options, just as well as they do on futures all these years.
All these years.
Yeah, for those who don't know, if you're new, CFRN launched in 2005. The live training room in its current format launched in 2008, I believe it was. So we've been around a minute.
A minute or two. Yes, we have. Yes, indeed.
Now, Michael just covered what happened the first 2 hours Wall Street was open today. The global markets opened Sunday night at 6 p.m. Eastern, the futures market. So as I was explaining, if you know what a stock is, think of a futures contract as you're buying one share, not in Apple or not in Google, but the S&P 500 is 500 large cap companies. So you're making a fractional investment in the entire basket of stocks, 500 stocks. Now, the way you determine the value of a contract is well, let's see what current price says. 45.19. So, because the S&P pays $50 a point, you take the current price, which you can see on my screen is 45.19. 45.19 times $50. When you go long or short one S&P E-mini futures contract, you're controlling $225,950 of S&P 500 best of breed equity. You're long or short the whole basket, okay? And now the cost intraday to trade, well, it varies with different brokers. With our broker, I think the current intraday rate is $750 per contract. So for $750, you're controlling $225,950 of equity. There's nothing to compare. That's why once I stumbled into futures, I just could never find the heart to go back to stocks because of the incredible buying power, the leverage. Now, when people hear things like margin and leverage, they go, oh my God, I'm going to lose my house. No, because Michael is teaching you every morning in the live training room, him or Val, how much are they risking on each and every trade? 8 ticks. So even though when Michael goes long one S&P contract or short one S&P contract, he's controlling almost a $250,000 of equity, he's only risking $100 per contract. So you're not going to lose your house, but you might lose $100. Now, if you get into discretionary trading with me, where we use larger time frames, larger targets, larger stop loss, even with that, the maximum we recommend that you risk, the max is $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. And so on the Dow, you take the current price and multiply it times $5. In Q, you take the current price, you multiply it times $20. That tells you how much equity you're controlling for a minimal price. So, just wanted to make sure that anybody that's new doesn't get freaked out by that term, contract, okay? You can get out of a contract in the S&P like that. Now with stocks, sometimes you can be in a stock and you have a really nice run up, and when you decide you're ready to get out, you got to hope that there's somebody willing to buy what you're trying to sell after that huge run up. If it's a real popular stock, then there probably will be, but it's possible there might not be. But on the S&P 500, I don't care what time of day it is, markets open Sunday night, 6 p.m. Eastern, remain open around the clock till 5 p.m. Eastern on Friday, with a 1-hour break every day from 5 p.m. to 6 p.m. Eastern. Tonight, Monday will end at 5 p.m. Eastern today. Tuesday will start tonight at 6 p.m. Eastern. So the beautiful thing about futures is not only the leverage that you have, but the ability to trade literally around the clock. So, with all that said, we have 2 different alert services. This is Logic 247. We're in week 191. We published our 10,000th alert live during the show last week, Tuesday or Wednesday. There's a video of it in the Telegram discussion group channel. Wasn't a big deal. It was $100 per contract trade, but it was number 10,000 and it did make it to its target. So anyway, since the markets opened last night, we issued a total of 12 alerts. One never triggered. We're all caught up. So after the show, I'll be looking for opportunities to put out there in the Telegram channel. Now you got to be a passport holder to have access to the Telegram channel where the logic alerts come out. If you're on a trial, you have access to the Logic 247 trial channel for the week that you're on the free trial. So we had one stop out based on that $300 max risk profile. Now again, we don't risk $300 on every trade with the discretionary trading, but that's the max. Less when possible based on market structure and that simple three-step process we teach all of our traders. So with the total of 12 alerts and 11 actionable, so far one stop out, which is 9%. Over the last 191 weeks, what we've averaged is 20% of the alerts do get stopped out based on not risking more than $300 per contract per trade. And all I just said before. Now those are the logic alerts. They come out around the clock. They're based on current price action. Our original alert service, it's called the concierge trade alerts, or the CTAs as we call them. Now this is different from logic in that this is a static report published shortly after the Globex open each evening. These don't come out around the clock. Once this is published, it's carved in stone for the entire week, just like the weekly trading zones. I mean, it's carved in stone for the entire session, just like the weekly trading zones, once published, are carved in stone for the entire week. Now, when we go to my charts, you'll see that I still have last week's zones on my chart, because even though the zones are issued or published for our members at 6:15 a.m. Eastern Monday morning, and we've published them for our members since December 14th of 2009, so well over a decade. We wait for the new zones to take control of the market versus the previous weekly zones. So on today's show, you'll see last week's zones, because all the alerts that went out last night and the CTAs that went out last night are based on last week's zones, because the new zones don't come out till 6:15 a.m. Eastern. Now, any alerts I put out this afternoon in logic and the CTAs I put out tonight will be based on the new weekly trading zones. So you probably don't trade all the markets we cover, but whatever market you do trade, when this report gets published, and it'll pop up in your private Telegram channel if you are a passport holder, you got two numbers for each market. So at 7:15 p.m. Eastern last night, when this was published, you should make note on the S&P as an example of where price currently is. Because from that point forward, if price starts trending up towards 45, 44, that's bullish, so our strategy will look for opportunities to be long the market. That's where you'll use Logic 247 and everything you learn in the live training room to yourself find opportunities to be long the market. If price starts trending down towards 45.17, that's bearish, so our strategy will look for opportunities to be short the market. And that's where you'll use Logic 247 and everything you learn in the live training room every day for 2 hours to yourself find opportunities to be short the market. So if you want to grab a screenshot, go ahead. We're going to walk through each and every one of the markets real quick. Okay? You got it? See, there's this side button on this new super mouse that I got to figure out how to turn off. Because if you hit that little button on the left side, it reverses you, it takes you back a page. So I may just go to the dollar store and get a just plain old $4 mouse and be done with it. I bought this for my son because he's a gamer, and it was even confusing for him. I said, "Hey son, what about all these buttons?" He goes, "Dad, I could never figure it out. That's why I didn't use it." So anyway, all right. We already looked at the daily chart of the S&P. That's where you should always start your trading session. Doesn't matter when you start trading, what time of day. We have traders around the world, so for them, the London Open is 3 a.m. Eastern. Our Wall Street Open is 9:30 a.m. Eastern. The good news is with the S&P and gold and crude and other markets, there's plenty of activity for you to be able to trade during those hours based upon where you are on planet Earth. If you're on the West Coast, it's midnight. Some traders stay up till midnight, trade the London Open, and then they don't have to worry about the Wall Street Open. Okay? The London Open is a little more subdued than the Wall Street Open, and you'll often find some very good trading opportunities at the London Open. I'm not saying you need to get up at 3 a.m. if you live on the East Coast, but I am saying if you live on the West Coast and you don't go to bed till midnight anyway, between midnight and 1 a.m. you might be able to just get your goal for the day and be done. Okay, we already talked about the 62% reverse fib. From the high to the low, 2 days now. We tried Friday to break through it. We got above it a little bit. We actually closed above it. Now we're building a red candle on the day. And there's a wick that's come down, it looks like, to touch the daily step line and blue and climbing, both of which could be good support. If price is able to trade through that support, the next area you should expect for support is the 50% reverse fib at 44.47. If price gets through that, then the daily BBC. Not only do we expect that to be good support, but we expect that to give us a very nice bounce. The pullback holds more often than it doesn't. In this whole downtrend, pull back to the BBC, held. Pull back, 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 held. And then eventually we know it's not going to hold, and that's going to give us an opportunity to trade in the other direction. This is probably the longest downtrend we've had in over 2 years. So we know resistance is at the high of the session. Okay. We've got a triple top right here, a triple daily top. February 2nd, February 9th, February 10th. Okay. Now, if we take out the high of today, then there's a window of opportunity up to, see, I said the high of today was 48.5, and this window of opportunity was at 45.38. So this window offered up 10 points. It's often very common when we enter a window of opportunity to get about halfway through. We didn't get quite halfway through, and then back up, and then make another run. Okay, but that all depends on order flow. Is there more buying pressure or more selling pressure? Okay. Now, price always reverts to the mean. In our case, the mean is this green line called the BBC, bull bear cross. No matter what price does, it's eventually going to come back to the BBC. And when it comes back to the BBC and gives you a down close like this right here, that's a trade that could have lasted for 3 days, taking you from 43.58 down to 41.44. Now this is the daily chart, okay? So keep that in mind. Now we'll go to the 30-minute chart of the S&P. All of the alerts, both concierge and logic, are based on the 30-minute chart. I call that the roadmap. And again, these are last week zones that you're seeing on the chart. So it's been Friday was a quiet sideways day of consolidation. We're having another quiet sideways day of consolidation at a slightly higher level. Okay. Now the CTA for last night on the short side was 45.17. And the long side. Not uncommon some days to have some two-sided action, which is what we had. Now, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. This vertical line separates today's session from Friday's session. So the market opened, we came down to last week's weekly trading zone, we came down to the BBC, we had red and falling in the picture, which is bearish. That pushed us down to the short CTA, and we put in a swing low at 45.14. So that's 3 points, $50 a point, $150 per contract traded. Then we got back above the BBC, we made a run at the long side. We hit the CTA long trigger at 44, and we put in a high of 48.5. So that's 4.5 points. So $225 per contract traded. Then price pulled back to the BBC and last week's zone. When price drops to a weekly zone, we expect it to be good support until proven otherwise. When price drops to the BBC, we expect that to be good support until proven otherwise. So we had two good reasons to expect this area to be support, and it was. And it sent us up the trigger. But unfortunately, red and sideways had crept into the picture. On a long, you want blue and climbing. On a short, you want red and falling. And so this one did pop up to 46. Then we came down. We got below the BBC. We're about to get a bearish cross. Price is pulling up to last week's zone, which we expect to be resistance, along with the BBC and red and falling. So we potentially get another leg to the downside. Now the swing low here was 45.12. That's 5 points at $50 a point. It's $250 per contract traded. Then we got back above the trigger, triggered again, dropped to 45.0975, so we'll call it 45.10. That's 7 points, $50 a point, $350 per contract traded. Now this green candle is about to run into resistance. The step line, last week's zone, the BBC, red and falling. If price overcomes those, then buyers are serious about taking this market higher. If we stall out here, then look for another leg to the downside. Now remember, 2 points in the S&P with one contract is $100. Once you earn the right to trade 2 contracts, the same 2 points is $200. Once you earn the right to trade 10 contracts, the same 2 points is $1,000. When you first become a passport holder, you go to class every morning for 2 hours in an interactive environment, trade along in your simulator. That's the best way to learn the methodology and strategy, because if you're trading along in the simulator, you're going to screw up, you're going to mess up, you're going to make mistakes. So that gives you a question to ask Michael or Valerie, whoever's trading at the moment. Hey, I did this, or you did that. What did you just say? What do you mean by that? What did I do wrong? It's an interactive environment. And in one-on-one mentoring sessions, which passport holders have unlimited access to one-on-one mentoring, one of the things that traders say is, I'm watching Michael. He's doing such a great job. I just hate to interrupt him with a question. The whole purpose of him being there is so that you can interrupt him with a question, because that's how you learn the methodology and the strategy. Now, when you're brand new, you hear a lot of buzzwords you never heard before, like BBC and WTZ, and there's only about 7 or 8 buzzwords you may have never heard before. And so once you understand what they are, you don't have to ask again. See, our trading strategy is not an evolving type strategy. Okay? We haven't changed anything in many years, because if it's not broken, no reason to try to fix it. In fact, if you try to fix something that's not broken, you're probably going to break it. So our methodology and strategy is based off the underlying principle upon which all markets operate. Price flows the same on an S&P daily chart as it does on a 1-minute chart of crude, as it does on Apple stock, as it does on the British pound, as it does on BTC. Okay? It goes from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending process. What our indicators do is show you where dynamic support and resistance are likely to be. The weekly trading zones are your fixed support and resistance for the entire week. Now, some people will say, oh, that's horse and buggy, man. You can't trade support and resistance anymore. That's the old days. We got algorithms now. We got so many shiny objects. Go get your checkbook. Many of you already have your credit card numbers tattooed on your frontal lobe because you've bought so much stuff on the internet that sadly didn't do what it claimed to do. We don't claim anything other than we have a strategy that works across all markets and all time frames. Our traders have successfully used it for many, many years, and we will invest our time and energy in training you how to do what all of our other traders do. And you can go into our trial discussion group if you're new, and you can talk to our traders and ask them about their experience. And then once you become a passport holder, then you have access to the members only discussion group. Okay? So, we've covered everything that's happened so far on the S&P. It's just been really quiet. In fact, the average true range has dropped to 12. Last week, it was at 16.4. And then back here, yeah, it came down a lot in early trading. But as you can see, the market's pretty quiet. I'll give you a better idea on the daily chart. The average true range over the last 14 days is 90 points from the low of the day to the high of the day. Over the last 100 days, $81.4 points from the low of the day to the high of the day. Okay, let's go to the Dow. As you can see, the Dow dropped right to last week's weekly trading zone, and now it's bouncing up to the BBC, which we expect to be good resistance until proven otherwise, and will most likely give us another leg to the downside. So the market opened last night. The CTA was 34,790. On the first trigger, we made a run up to 34,808. So that's 18 points at $5 a point. almost $100 per contract traded. 790 to 808, yeah. Then we pull back, found support at blue and climbing. You should always expect to find support on a pullback to blue and climbing until it trades through blue and climbing. Then you expect support at the BBC. That pullback took us up to 835. So that's 45 points at $5 a point. That's over $200 per contract traded. The short CTA come on, new mouse. There you go. Okay, so 34,640. This first little drop took us to 34,630. So that's $50. And then we had a little drop here. It took us down another $50. And then we pulled up to the BBC, which we expect to be resistance, and it was, and it set us back down. But in quiet trade, we only dropped to 606. So that's 34 points at $5 a point. Then price got back above the BBC, triggered on the long side. Now keep in mind, these are last week's zones. On tomorrow's show, the new weekly zones will be on my chart. Okay, and so we get below the BBC, we got red and falling. We trigger 640 and put in a low at 578. 60 points, $5 a point, $300 per contract traded. Then price got back above the trigger and dropped again. This time to 688, so we'll call it 690. 50 points at $5 a point. Then we got back above the trigger and triggered again. This time down to 590, which is $50 a point at $5 a point. Market made $250 per contract available. And then we got back above the trigger right here by 11 points. And then we dropped to the target. On every long alert, the final trade to target is the weekly zone above. On every short alert, the final trade to target is the weekly zone below. And because the CTAs were issued last night, as I explained, we're using last week's zones. Okay. So from 640, the zone is 34,500 / 505. So it's 135 points, $5 a point. $675 per contract traded. Now, if you follow the 2420 blueprint, once you've earned the right to trade 10 contracts, that same move is worth $6,750 per contract traded, more than what it cost you to become a passport holder. As price pulls up, we expect to find resistance at the BBC until proven otherwise, which will lead to another leg to the downside. Question is, will it spike it enough to re-trigger the CTA? For our members who've already learned the methodology and the strategy, they really don't care if it gets above the CTA number or not. All they need to see is a pullback to the BBC and then another candle start printing to the downside. Hang on 1 second, guys, and I'll be right back. Sorry for the interruption. That was my daughter, my prodigal daughter. Some of you know what that means. When she comes to my door. Well, oh, my godson, I really call him my grandson, little D, because he has my same first name and middle name. But everybody there calls him Little D. I'm Big D. He's coming in July to do his senior year of high school here in the U.S. We had his mom flown here when he was born, so he could be born at St. Joseph's here in Phoenix, so that he would have a U.S. citizenship. Their whole family's become part of our family because they're the ones who run the orphanage on a day-to-day basis. So that's a long story. I'll tell you another time. But here's why I brought it up. He's been wanting to learn how to trade for a long time. The last time he was here, he was still a little young, okay? But I'm going to teach him to trade. We're going to record everything. Because when he returns home after spending a year with us, I want him to be able to support his family. Remember, 2 points in the S&P. With 1 contract's $100. With 5 contracts, it's $500. With 10 contracts, it's $1,000. Now, it's going to be predicated upon a signed agreement between he and I that he doesn't go out and buy a bunch of gold chains, $800 tennis shoes, etc. Okay? He's going to go home able to support his family and other members of the community and all the teachers at the orphanage and all the members who volunteer at the church. But he's going to do it with humility. And he's a godly young man. He really is. I'm so proud of him. I held him the day he was born. I held him in the hospital, and Chris and Agnes, his mother and father, they've been a part of our life since 1998. We broke ground on the orphanage in 2000. We started with 5 acres, and we now have 25 acres and over 750 kids. And we started out with just primary school, but then a doctor came along from Germany and saw what we were doing. He built us a high school with labs, science labs, computer labs, and it's incredible what God can do. I could have never done that. My wife could have never done that. But God spoke to us when we met Chris, and God spoke the same thing to both me and my wife as we were sitting there praying. And so we stepped out in faith. You know, Chris was here. He had been invited to the International Pastors Conference at Phoenix First Assembly. My sister-in-law just happened to meet him in the hallway in between breakout sessions. And she liked him, and so she called the pastor of the little church we attended at the time and said, "Hey, I met this guy. He's from Africa. Could he speak tonight at the Wednesday night service?" And Pastor Coney said, "Sure." And so my wife and I went, not knowing this was a Wednesday night. How does it go? They say, people who go to church on Sunday morning, I'm going to get this wrong. People that go to church on Sunday morning love God. People that go on Sunday night love the pastor. People that go on Wednesday night love Jesus. I don't think I got that right, but somebody will correct me, I'm sure. Keep those letters coming. All right, anyway, it's going to be exciting. I'm going to teach him, and we're going to record each training session. And the goal being that when his year here is up, I mean, he'll have a full, caseload at going to school, so it's not like something I can teach him overnight, but we're going to work on it. and I'm excited, and he's excited. I hope you're excited. Okay, that's how you change. That's how you can change the world. You know, if he can learn, I mean, average annual income Uganda 2022. Now, this is if you have a college degree and can get a job that actually pays a salary. It's gone. Oh, I see what they did. Yeah, $7,000 a year. A year. $7,000 a year. I just showed you a trade. If you were trading 10 contracts, which was worth almost 7 grand. So, anyway, back to the business at hand. If it's God's will, it'll all come together and it'll all happen perfectly, just like the orphanage did. My wife and I just happened to be there on a Wednesday night. We just happened to pray about it and get the same answer from God. And now we broke ground in 2000. It's 22 years ago. Do something with your life starting today, because it goes by really fast. Really fast. Okay, I'm just moving these lines over because they're not part of Friday. They are today's numbers. Okay, as I said last night, the Russell led the way on the downside. We got our first CTA trigger at 2069, and we dropped to 2067.5. So 1.5 points. Then we popped back up above the trigger. Down we came again. A little more respectable. 2065, so 4 points, $50 a point, $200 per contract traded. Then we got back above the trigger. See how the pullback to the BBC held? Yeah. And then we dropped to 2063, and we'll call it 2064. 5 points, $50 a point, $250 per contract traded. Then we got above the BBC, we got above last week's zone, and then we ran into resistance. This thing stalled out before it could challenge the high of Friday. That's bearish. We got a high, got a lower, got a high, a lower high, a lower high, and a lower high. And then this time, we come down 2069 to 2067, 2 points, $50 a point. Back above the trigger. Remember I said once an alert triggers, there's a greater probability it's going to trigger multiple times than not trigger multiple times. Just make sure on the longs you got blue and climbing, and on the shorts you got red and falling. Okay? So this is the trigger right here. It took us all the way down to the target at 52. So from 52 to 69, that would be 17 points at $50 a point. It's $850 per contract traded. Now, it kept going, but what was once support will continue to be support until proven otherwise. Same up here. Now you get this high, this high, this high. Price just couldn't overcome it. Not that there weren't contracts for sale at a higher price, just no institutional investor or even retail trader was willing to pay one tick higher. And as soon as short sellers see buyers stop buying, they pounce. And they pounce, right? And they pounced. It took us all the way down to the target and beyond. Okay. All right, NQ. I moved it. What's that number supposed to be? Hang on. The NQ CTA last night, the long side was 14,784. Okay, I thought I messed it up. I guess I didn't. That might be a first. Man, all of these buttons on this mouse, I'm just trying to learn to keep my finger off that one button. Oh, and we triggered on the short side, so we had two-sided action, even though it's a pretty quiet market. And the short side, 14,709. All right. So we open here, we come down to the BBC, we get below the BBC, we got red and falling in the picture. Basically, this was the open. We spiked, then we got, so basically the zone held. The zone held Friday afternoon, the zone held last night, put us below the BBC, triggered us on the short CTA, 14,709. This little low right here. Yeah, this is not a good trigger, but it dropped 4 points, which is $80 per contract. So, I mean, money's money. Then it gets back above the trigger, drops again. This time it drops to 14,681 and a half. So let's call it 82. So that would be 18 and 9. That's 27 points at $20 a point, $540 per contract traded. And then we got back above the trigger again. And we dropped to 14. We'll call it 660. So that's 49 times 20. $980 per contract traded on this trigger right here. Okay. And we get above the BBC, red and falling, turns to blue and climbing. We consolidate a bit here at the zone. Only 3 things happen at a weekly trading zone. Throughout the week, I'll be teaching you what those 3 things are. So on the first trigger, 14,784, we ran up to 14,812. So that would be 16 and 12. $28 points, $20 a point, $560 per contract traded. Then we pull back to the zone, which we expect to hold until proven otherwise. We even spike down, touch the BBC, which we expect to hold until proven otherwise. This is what proven otherwise looks like. Okay. And so from 784, we ran up to 912. So 912 minus 784. $128 points at $20 a point. It's $2,560 per contract traded in 30 minutes. And then we get back below the trigger right there. And on that run, we put in a high at 885. 885 minus 784. Basically, that's 100 points, $20 a point, $2,000 per contract traded. So you had 2 back-to-back $2,000 plus trades And then this one isn't the best setup, but it dropped 8 points at $20 a point, $160 per contract traded. Now we got above the BBC. Now not all triggers are created equal. We don't want to go long into red and falling. I mean, it could just push right through it like it's not even there. But the rule of thumb is when you're at a trigger, if you got red and falling overhead, our more experienced traders might take it up to red and falling and then get out. But if you're new, you should pass. Okay. All right. So that covers the 4 major indices: the S&P, the Dow, the Russell, the NQ. S&P just quietly hanging. Got red and falling, BBC, weekly zone. The next logical thing to happen is a move to the downside. However, if it gets above the BBC, then we have no problem trading it long back up to the highs of the session. The Dow still in a holding pattern. Russell, window of opportunity. Okay, price has found resistance at red and falling. It's found support at the step line and the weekly zone. If price can trade through the zone, then we expect it to continue down until it reaches this low. But I'm always conservative with these windows of opportunity. So this is basically 2050 down to 2047. It's 3 points. Now, if buyers keep buying, then we'll make a run up to the BBC, which we expect to be good resistance. And that will create a leg to the downside. Okay, that covers all the indices. The NQ is going through red and falling like it's not even there. But by the time this 30-minute candle is finished in 5 minutes, there could be a very different picture. Okay, so but it looks pretty bullish at the moment. All right, crude oil. This is where the market opened last night. It came right down to last week's weekly trading zone, spent many hours consolidating at the zone. And it came down to the trigger at 108.50. All right, so we get bearish cross. We get a leg. We get a retracement to the BBC. The pullback holds more often than it doesn't. We come down, we trigger 108.50, and we drop to 108.30. So $200 per contract traded. Then we get back above the trigger. We trigger again. This time we dropped to 106.81. Yeah, my breakdown used a calculator. 108.50 minus 106.81. $1,690 per contract traded. And price pulled up to red and falling. And like an obsessive compulsive thing, because this is an important price, important area, CTAs And logic entries are always important prices, important areas. So not only did we pull up and find resistance, but we spiked just enough to get above the trigger. Trigger again, and this time we made it all the way to the target. Remember, on a short, the final trade to target's the weekly zone below. And so, from 108.50 to 106.50 will be $2,000. So this is $1,900. Then it kept going, and then it found support at last week's zone, which bounced it up to the BBC, which we expect to be resistance. But it didn't get above the trigger. But that's still, our traders who understand the strategy would know, to be short on this candle. We've got basically support at the zone, and we got blue and climbing in the picture. So the window of opportunity here, you got to get below blue and climbing before you go short, because you got to expect that to be support until proven otherwise. So this would be something like 105.50 to 104.90. Just about a $600 per contract window of opportunity. 105.50 to 104.90. Okay. All right, gold. Let's tidy this up. $19.51. Obviously, the long side never triggered. Okay, on the short side, 1951 was the trigger, so the first trigger took us down to 1947. That's $400 per contract traded. Then we got back above the trigger and traded all the way down to the target. Now the target, the final trade to target is the zone, which was 1937/38. So 51 minus 38. $1,300 per contract traded from the trigger, published trigger, to the published target. It went on, just like crude oil, down to the next zone from last week where it found support. We caught a huge bounce. We don't know why. It was very strong. And then we pulled back to the BBC, which acted as support. Now we're above the BBC. But you got to be careful, because this high is potential resistance. This high is potential resistance. You could go long at 1941 up to 1942, is $100. 1944 to 1945, that's another $100. And then from 1947 up to 1949, that's $200. And then they expect a potential trigger on the short side. All right, just two more markets. I'll make it quick. Silver, no trigger on the short side. I'm sorry, no trigger on the long side. Now with silver, 2 pennies is $100. So from 25.56. Now the zone is 25.49/50. So that's 6 pennies. That's $300 per contract traded. And then it dropped the last week's zone, and we've just been consolidating at this zone. for hours. And a quiet sideways market. And the euro. Oh, I moved that. I saw it. Let me fix it. The long, we know never triggered, but let me just tidy it up. The short side on the euro, the 6C, oh, my platform didn't load right. See if I can get it. Yep, there we go. That's the published CTA short side. So we trigger once, we get back above the trigger, we trigger twice, and we run all the way to the target. Because I don't personally trade the euro, I can't calculate the euro in my head, but that's a pretty good move. It's got to be worth a few $100. See, our methodology and strategy, when I say it works across all markets and all time frames, I can even apply it to a market that I don't even trade. Because all markets trade the same. From support to resistance, back to support, back to resistance, over and over, again and again, never-ending cycle. And the people who tell you you can't trade support and resistance these days because there's algorithms and all this other fancy stuff, those are people that have multiple things to sell you. We don't have multiple things to sell you. We got one thing. The passport, it's lifetime, it never expires. It's everything a trader needs, all under one roof, one low price. What we charge for the passport, some traders would trade you for one 1-hour mentoring session. And sadly, people pay it. We have traders who spent $30, $50, $300,000 trying to learn how to trade before they found us. Now they're doing okay. Some are actually teaching others. Nine out of 10 traders fail. Now, this article was published in 2006, Futures Magazine. 9 out of 10 new traders fail. Why? Because they don't have a teacher. Imagine trying to become an airline pilot without a teacher, or a plumber, or an electrician, or even a barista. You ever seen all those levers and knobs back there? It's like something out of Wizard of Oz behind a curtain. I could not even make myself my own self a cup of coffee in a Starbucks. Unless they had some drip coffee already made, and then I could do the spout thing, right? But every day, traders open accounts, put 5, 10 grand in, and just start clicking the mouse till it's all gone. And then they cry, and then they send another wire to Chicago. And when that's gone, they cry really hard, and then they send another wire to Chicago. Doesn't have to be that way. Really doesn't. You just need somebody to teach you. So not only do we give you 2 hours every trading day in a live trading environment with a trader putting on and taking off trades, explaining every move they make, every trade they take, and the rule behind it. It's rules-based trading in the live training room. And as soon as you get your passport, you should be, or as soon as you take the trial, you should be trading along in your simulator. Because the more mistakes you make, the more questions you'll have to ask. Now, once you've been with us a couple, 3 weeks, you'll kind of just dry up. You'll run out of questions because it's that simple. I've seen charts with so many indicators and oscillators, and you can barely see price. Now, Michael and I were once the king of the indicators. We bought everything on planet Earth, and when there was nothing left to buy, we started to roll our own. And then eventually it dawned on us that we were going in the wrong direction. Sometimes more is not more. Sometimes less is more. And so we spent a lot of time and a lot of energy getting rid of all the stuff that did not contribute to the bottom line. And what you see today is what works and has worked for many years. And you can learn it because you not only have the classroom experience, which never expires. Trading can be a lonely business. Finding someone that speaks your language, you usually have to go hang out in some shady message board or chat room on the internet where people are using foul language and making racist remarks and calling you an idiot. And you won't find that in our discussion groups. You'll find people who've taken the same journey you're embarking on. They've learned our methodology, they've learned our strategy, and they're happy to help the new guy or lady. All you have, but don't be shy. You know, if you're on a trial, you have access to the trial discussion group. Introduce yourself. Hey, I'm Bob. Hey, I'm Shirley. People will say, nice to meet you, welcome. And you can post any question you want in there, and you'll get an answer. Literally around the clock, 24/7. And then once you become an official passport holder, you'll have access to the members only discussion group. But you also have access to unlimited one-on-one mentoring. See, we don't have any upsells. We don't have any of that stuff, okay? You know, that insults your intelligence every time you buy something. The second, you haven't even finished checking out and they're trying to sell you the upgraded version. Wait, don't leave yet. We'll throw in this bonus. We will never insult your intelligence, ever. Unlimited one-on-one mentoring. You'll own our indicator set for life, which works across all markets, not just futures, but stocks, forex, crypto, options. You'll receive the Logic 247 alerts, which at some point in time will include stocks, and the concierge trade alerts, which is the static report that's published shortly after the Globex Open each evening. It truly is everything a trader needs at one low price, all under one roof. To get your passport that never expires, go to eminifuturestrading.com. And there's no renewal fees, not monthly, not annual. Once you become a passport holder, that's for life. If you have questions, you can call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Let's go now to our good word for the day. Where did my notes go? Oh, by the way, if you're thinking of switching from AT&T to T-Mobile, get ready for a nightmare. I've had the same phone number since 1996. My wife's had the same phone number since 1998. And so it was very important. Now, we made the switch because it saved us a lot of money. And not only did it save us money on our phone bill, They gave us Netflix for free, which we already pay for, so I get to cancel that account. But the hang up is they won't, although my wife's phone's completely paid for, the very simple process, first you have to unlock the device, then you have to port out the number. Unlock the device first before you port out the number. And I got to call this young girl who's the manager at the local T-Mobile store named Maria and apologize for my behavior yesterday. I mean, I could just blow it off and go, well, but that would be wrong. I've already apologized in person to the guy at the AT&T store, but I owe Maria a phone call because it was a finger-pointing game. You know, one says, oh, well, it's their fault. No, it's their fault. Anyway, I embarrassed myself in front of my wife and my daughter with my behavior, and myself, and God. So I asked forgiveness from the AT&T guy today. I got to call Maria. It's going to be an uncomfortable call. Maybe I'll catch her voicemail and be able to just leave a message. Hey, this is the idiot that came in there screaming yesterday. But this was after I had spent probably 8 hours on the phone trying to get this thing sorted out. I was really frustrated. And I wanted to be here for the Wall Street Open last night, which turned out to be pretty non-eventful. So, anyway, what to do when you feel down? That's the topic of our good word. Joseph had the same problem. Yeah. Well, hopefully you get it worked out, brother. James 5:17 says, Elijah was just as human as we are. Elijah got so down he was ready to end it all. And it happened on the heels of his greatest victory. He had just called down fire from heaven on Mount Carmel, and he went from exhilaration to exhaustion. We forget that even when we're successful and love what we do, it can be physically, mentally, and emotionally draining. That's got trading written all over it, right? People say, how can you be tired? You stand at a desk all day. I stand, by the way, I don't sit. They say sitting is the new smoking, so anyway. If you're a purpose-driven person with no boundaries, pay attention. Number one, exhaustion made Elijah lose perspective. He had just defeated 850 false prophets. You can read about that in 1 Kings 18:19. And now he was running from one woman. He defeats 850 false prophets, and now he's running from Jezebel. General George Patton Jr. said, fatigue makes cowards of us all. When fatigue walks in, faith walks out. It distorts our thinking and makes us overlook God's power and his promises. Mental fatigue coupled with physical exhaustion is a deadly combination that invites hopelessness and creates the illusion that we have no options. Number two. Now, my wife says I was hangry yesterday. That's when you're hungry and you easily get angry because I didn't eat lunch yesterday. Fear made Elijah isolate himself. Having left his servant behind, he told God, I am the only one left, and now they're trying to kill me. 1 Kings 19:10. At that moment, Elijah was in the worst possible company, his own. When you feel down, it isn't the time to isolate yourself. That's when you need to reach for God and those who love you and can help you get back up. Even Paul needed help. After writing in Macedonia, we found trouble all around us, he added. But God, who comforts those who are troubled, comforted us when Titus came. 2 Corinthians 7:5. So, who do you need to call? Who do you need to reach for? Don't keep putting it off. Just do it. Oh, and a question. Have any of you gentlemen ever attended one of these father-daughter dance kind of things? You don't have to answer me right now. You can answer later in the discussion group. But one of the two churches we attend, you know, I go to Elevation from my living room in my pajamas on Sunday morning. But there's a physical church we go to, CCV, Christ Church for the Valley. They're having their 40th year celebration. They have multiple campuses all over the valley. I don't know about all over the world. But they're having, next month on the 4th, their annual father-daughter dance. And I don't know what the protocol is. Am I supposed to like get her some kind of promise ring or, you know? I mean, I know how to behave and eat with good manners, and I'm still pretty fly for an old guy when I put a suit on. But beyond that, I'm clueless. So, if you can help an old guy out. Joseph says, of course, just be there. Wow, that is so powerful what you just said. Just be there. And what he means by that is don't be thinking about trading. Don't be thinking about anything else. Don't be thinking about... Just be there. Thank you, Joseph. That's wisdom I needed. I appreciate it. Okay, guys. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.